I think the mainstay reason Ford and GM are both down in the last month is the UAW issues.
Across on the charging front, we've seen a long list of companies adopting Tesla's charging standard. Who's the latest now?
The effects out of China. We have so much going on, so many stories out of China in the last few weeks.
But do we really believe China should be super important to our stock market these days when the U.S., frankly, is in ascendance and they're teetering?
All that and more. So let's get to it. Tesla stock is down again today. Oh man. Bad call by me, making the call yesterday. With some epic volatility, Tesla is still down about 2%. You ever heard of that term in poker called tilt? In poker, a player may go on tilt when he gets beaten badly, especially when he makes the right call. You see, there's no guarantees in poker unless you have the absolute nuts, and quite frankly, that doesn't happen very often. I tell you this because in 2022, as a trader of options, I went on tilt. It took me a long time to understand that Tesla was not going to rebound in 2022. By a long time, I mean like 5 months, before I started switching my strategy from calls to puts. Lately, I feel like I'm having a replay of 2022, not knowing when to switch from calls to puts. When a player goes on tilt, he finds himself doing things he would normally not do, in situations he would normally not be in. I find myself back on the trade options page. With all the gunk in the news about a weak China, the US economy too good, we might get more interest rate hikes, all of this noise, your boy's gonna try to put in another call. We're gonna spend about $270 to see if we can get some upside potential for Tesla for the remainder of the week. Implied volatility still under 50%, so we're gonna roll the dice and see what we get.
Time for Under 30. Alex Coffey joined by Jenny Horn, and we're talking Ford Motor stock that, I think for forever has been under 30, and it's going to take a lot to get it over 30. So I think we're comfortable to talk about this one for this segment here, Jenny. But headlines being made today. We'll talk a little bit more about them. I'm not sure how I feel about it, though.
I know, and so we, at least it is below $14. So it's like, be careful what you wish for, because we were joking this name never ever moves around $14. Now we're stuck at around $12. But we have seen investors concerned about this potential strike with the big three Detroit automakers. So here now to tell us more on this news, and as well as some of the analyst activity we got today in Ford, I'd like to welcome in George Tillis, senior markets correspondent for the network. So George, walk us through the Ford story here. I mean, this name has fallen now 9% for the month. GM as well. It's not a Ford-specific story, but walk us through your thinking.
Well, this is an interesting situation. I think the mainstay reason Ford and GM are both down in the last month is the UAW issues with the contract negotiations. I think at the end of the day, it's going to cost both these businesses quite a bit of money to keep the production facilities open. And I think that's what the market is essentially telling us, because if you look at the last 30 days, both of these stocks are down about 20% respectively. And if you compare them to, let's say, international automakers like Honda or Toyota Motors, it seems to be more of a domestic production-based union contract issue versus a total vehicle sales issue. I think at the end of the day, also Ford is facing maybe some secular challenges because they're retooling their factories to catch up with the demands associated with electric vehicles, while at the same time prices seem to be stable, if not falling, when it comes to the new vehicle sales. And I think that's, again, another challenge to potential margins for Ford. I'm not surprised to see the stock down as much as it has been in the last month or so, considering, again, these UAW contract negotiations.
I'm not surprised to see Ford down. The UAW concerns are quite real, putting the Detroit 3 in an unwinnable position. The best bet here is to rip the band-aid off and live with the new normal. That is, of course, going to bestow upon you greater costs for production. But production you must have. Ford, GM, they can ill afford to have any lack of production at this critical juncture. Trust me, it's going to be hard enough.
The vehicle customer experiences, and the example that they provide is using a car's camera to recognize a bear while the driver is asleep when camping. How is this going to sell more cars, George? If I'm an investor in Ford, this upsets me.
Oh, I agree with you, Alex. Look, so what's going on here? And by the way, I will say this, in my experience, also, changing of the guard when it comes down to executives or adding or changing the head of a business division can make a meaningful move in the short term. In the long run, I don't necessarily think it's a game changer. I think what's happening here in the automaking space or automobile space is we've talked about this where there used to be so much volume. Companies were making money on lower price, higher volumes. Now it's high price, low volume sales, particularly when you have to order specialty vehicles or low supply based vehicles. Another way to make money is, of course, recurring revenue, subscription services. In other words, paying for features that your car already has, so like heated seats, heated steering wheel, so forth, and all the other ancillary features and services that you just mentioned as well. Is that a good business strategy? You have to ask. One would say perhaps it is, but perhaps it's not, if that's the case, going across multiple automakers, not just Ford.
Under a microscope, Ford could look like an ugly, ugly prospect. But you gotta take a step back. Minus this UAW situation, Ford is doing everything right in order to proceed into the next decade. The shift to EV is inevitable. The functionality of a computer on wheels plus the performance will leave the internal combustion engine in the dust. There are only 3 perceived roadblocks that are keeping individuals from purchasing an EV today. The biggest one, availability. Tesla is producing the most battery electric vehicles on the planet, and they'll barely crack 2 million, hopefully this year. There's just not enough EVs to go around for everyone to purchase them. Which leads to price. Price is steadily going down. There is an inverse relationship with the availability of battery electric vehicles. The more production capacity that is granted, the cheaper these products can be offered to the consumer. Price is going to come down predictably, but as you will see in this video, analysts will lose their mind at the prospect of dwindling margins. And the final perceived barrier is that of charging infrastructure.
Across on the charging front, we've seen a long list of companies adopting Tesla's charging standard. Who's the latest now?
Kiko, it's Fisker. They're joining the party, the Tesla Supercharger party. However, they will only gain access in 2025 the use of an adapter. And sometime after that, Fisker says they'll include that NACS port, that Tesla port, natively in their car. So I asked Fisker why 2024 wasn't an option like the other Tesla partners. They haven't gotten back to me yet, but I think that's really interesting there. Maybe it's a cost or sort of strategic initiative there. But still great news if you're an Fisker EV owner. Earlier this month, Fisker had that product vision day. Kiko, you were there. You spoke to Henrik Fisker himself and saw the new pair crossover, the Alaska pickup, and the Ronin supercar. And I have to ask you, Kiko, what did you think of the Ronin and also the Alaska pickup?
I mean, the Ronin range is the one thing that stood out to me. The price tag, $385,000.
Damn!
And then a range of more than 600 miles. Did I get that right?
Yeah, I mean, we'll see if that actually happens. But I think that a lot of people ask me about the Alaska pickup. So we'll see. A lot of good things going on for Fisker at the moment. And this charging deal definitely helps them out with more buyer opt-in, I think.
Sorry, did you guys say $385,000?
Damn!
Yeah, I think it might be even more too, right?
Talk about an expensive car, right?
Obviously, that's a lot of money for 600 miles of range, and that's if they can even get to 600. I mean, that's I'd be impressed. When are you ever going to need 600 miles per charge? It's kind of ridiculous. But I'll be interested to see if the prototype can be something of a mass volume situation. But at that price, probably not. The main key takeaway from this is that Fisker also joins the NACS. Tesla will single-handedly solve the infrastructure problem given enough time and if nobody else wants to join the fight. We don't just need more, we need better.
Green, senior markets correspondent, to talk about some of the effects out of China. We have so much going on, so many stories out of China in the last few weeks. So some of the worst data has come out. We've gotten news on slashing prices for Tesla. Tell us about that. And I also want to later, I'll ask you about some of the other stocks too.
Yeah, and Nicole, this divergence that we are seeing from the economic data in China compared to what we are seeing here in the United States, it's remarkable to say the least. Actually, this just broke right now. The GDP Now model for the Atlanta Fed actually increased their expectations for GDP to 5.8%. And that's up from 5.0% that they actually just announced or estimated yesterday because of the housing numbers here. So that type of difference compared to what we are seeing in China, where we are starting to see slower than expected retail retail growth is impacting companies like Tesla. We are seeing Tesla cutting their prices once again on the Model S by 6.7% and the Model X by 6.9%. Now, this is after data that we saw from China's Passenger Car Association, where they saw a 31% decline in sales from China-made Teslas from June to July. So we actually just saw the first reduction on a month-over-month basis when it came to demand. And
I don't have to tell you, that's a foolhardy assumption about the demand in China. Sure, China isn't prospering like we had anticipated coming out of their COVID shutdowns. But if you've been paying attention to the story by any measure, Tesla has met every single challenge over the past couple of years despite the adversity. In my bear case, I still have Tesla valued at $364 per share. Now, I know that can seem a little high given the current circumstances, but I remain resolute.
Reduction on a month-over-month basis when it came to demand, and now we are seeing Tesla really trying to respond and trying to spark growth within the China marketplace. Now, China is also taking action, trying to cut short-term rates to spark consumer demand in certain areas of the marketplace here, and the market is also expecting maybe a stimulus package coming from the Chinese government here in the next month or 2 months in order to try to reverse some of these trends. But it's also very interesting to note the misses when we are looking at this economic data is not really because of economic contraction in China. It's that the expectations of further growth post the pandemic is not being met. So that's really important to be able to delineate from a true deceleration in all these economic measures and just missing the expectations that the market was setting out.
No, I am distinctly not thrilled about the setup here. Can I just say that it does not make all that much sense for our stock market to be down as hard as it was today off of weakness in China, even as I've repeatedly said that China is a shadow of its former self. The Dow closed down 361 points, S&P lost 1.16%, NASDAQ tumbled 1.14%, and the primary culprit was not the bond market. Geez, I heard that all day. It was some incredibly weak Chinese economic data overnight. Now, let me ask you, I'm not ignoring the ongoing collapse of gigantic corporations and trust in China, but do we really believe China should be super important to our stock market these days when the U.S., frankly, is in ascendance and they're teetering? I think that China's hurting, and it will spill over to other countries for sure, but not as drastically as some would think.
If you're an investor in Tesla like myself, China is very important. The supply chain in and around Shanghai is vital to my valuation. But even without it, Tesla would be just fine. My bear, base, and bull case would be drastically different, but considerably higher than where we are today still. In conclusion, we get closer and closer to a UAW strike, which could lead to very, very bad things happening to GM, Ford. Fisker joins the NACS coalition, but who are we kidding? Everyone will capitulate. And Chinese economic data throws gasoline on the fire that is the Tesla price cut. And we've added another call option. Forgive me, I guess I'm going on tilt. That's all I got for you today. Be easy. Peace.